1 second, please. Stand by. Okay, so what I'm going to do here this morning is a recap on the YM trades. I'm primarily going to look at the Band-Aid setups. And what I want to show here, by the way, if you're new to us or we have quite a few folks that are on a 1-week visit or a free trial, and I just want to take a second to explain what you're looking at here because some of you might be just sort of looking at this for the first time. What you see on this chart, first of all, we're trading YM, this December contract. This is the Dow Mini Futures. It's $5 a tick. It's a good little instrument along with NQ. If you're starting to trade the futures, this is a great entry instrument. And you can leverage up with more contracts as you get better at trading it. But the chart you're looking at here has several things on it. You can see the background colors here, coloration of the bars, the stop dots, the swing high lows. These are all part of the what's called the Pro package for us here with Viper. And then most of you know, of course, the Band-Aid and the bands. See all the bands that are painting here? And of course the Band-Aid itself, which includes all the high energy times automatically placed on the charts. And for those of you that are new to high energy times, essentially what those are times in the market where we anticipate some increased volatility and or a swing high in the market. So for instance, we had a 730 Band-Aid. We also had two other Band-Aids we like to paint. We paint one generally within 2 to 5 minutes of the market open. I'm here in California, so this is all Pacific time down here. So the open of the market is 6:30 Pacific, and we generally like to paint a Band-Aid right at 6:32, which would have started to paint right over in here. Right around the open of the market would have been right about there. Yeah, right about there, 6:30 Pacific. And then, of course, we did have a news event at 7 o'clock, so we paint another Band-Aid at 7, and we'll talk about the trades that came out of these. So the first thing you can see here is that going into the open of the market, YM was in a trading range here. Going into the open, it had spent several hours in this trading range. However, you could have made note of the fact that you were getting sort of a series of higher lows and higher highs. It was drifting higher. And you did actually have a little bit of a what we call a yellow bar probe here going into the Band-Aid. So it's quite possible you could have been long ahead of the Band-Aid. But let's suppose that you weren't. In fact, I think Gary was already long the Russell. We were already in some trades right at the open. But let's say you didn't take that. The actual Band-Aid entry was when it broke this swing right here. I believe the entry was 47 or 48. Yes, right about there. Right in there. Now, what we like to see about this candle pattern right here is a couple of things. First of all, you can see that the Band-Aid was clearly broken to the upside, and I'll just draw a couple of things here. Can you see this pattern of about 3 candles? You get the initial burst popping through. And then what we really like to see is it pull back just a little bit, hold the top, or slightly dip into the Band-Aid or possibly check the bottom of it. As long as it stays in here, our initial stop is down here below the bottom of the Band-Aid for the entry, for the initial stop. And we like to put, if you can, at least 2 contracts on these trades. And here's the reason. The first one is that we like to get that initial pop, that initial burst. And we take some, you hear the terminology in the room all the time, bank some coin. Well, this is what we're talking about when you get this first pop. And it can be anywhere from 8 to 10, 12. Sometimes this was a nice one. This is about 20 ticks. And then you got a little bit of a consolidation area. Remember we said, okay, take some coin off here at 71 and put your stop at 59. Because you can see you had a nice little shelf here forming right just above 60. I don't know if you remember those numbers from earlier this morning. We're saying put your stop right down in here, and this is what we were looking at. See the stop dots? The trailing stop dots, these little dots here, following it up. Anyway, of course, you see we can break out here. Rich had lobbed out another number, 94, which you can see that it popped up. If you remember, we were kind of joking because it stalled out just shy of 94 right up here, just before the second Band-Aid painted, giving you a nice secondary entry right in here at 88, 89 when this broke. Here again you see this nice candle pattern right here where we pop through. The candles hold the top of the Band-Aid, giving you a nice long entry again. And then we get a final burst up here, taking out the 94 swing all the way up to, I think the swing high was 19. Now, if you recall, we stopped out at 10 because we were aggressively, after it popped through the second Band-Aid here and took out 84, we started to get very aggressive on our trailing stop, and if you recall, 10 was the out. So this was actually a couple of different trades, or from this initial Band-Aid, you had two legs to it. The first leg was about 20 ticks, depending on your fill and where you got out, and the second leg was somewhere around 60 ticks, depending on your fill down here and where you actually stopped out up here. All in all, good trade. Total 80 ticks at $5 a tick. You're looking at this trade, if you had one contract on leg 1 and leg 2, somewhere right around $400. Now, if you had multiples on that, of course, you made considerably more than that, but if you traded it just like you see it, it would have been about a $400 trade. And by the way, there were several people in the room who took this because we saw that Hugh had, several traders in here had called out the fact they'd taken this and were taking profits on the way up. Jim, yes, this is trades that I actually took. And if you came in late, you might have missed it. We called these numbers out. We tracked it. We called out the trailing stop the whole way up. And this was a legitimate bona fide trade from this morning right here. Now, there was a question, I'm not certain who asked it, about the 730 Band-Aid short. Let me quickly show that trade here. You can see that the market started to retrace into what we call the mid-band, which is this area right here. See this band? That's called the mid-band right here. And we started to pull back. The market couldn't get back up to the highs here. The Band-Aid started painting right in here at 730, and you can see that it actually had a short coming right out of the bottom of it. The initial stop is just above the top of the Band-Aid, which is right the mid-band here. We did not take that out, so you remain short. If you did not get this initial pop down through here, you had another chance to get short when it rolled and came back down through the Band-Aid right in here, on this bar right in here. So you had a couple of chances to get in this trade before it precipitously took that support level out. And you had a couple of legs to this one also. You could have just had one continuous trade of right around 50 to 55 ticks on the short, depending on your fill here. You know, where you actually got short, whether it was here or here, you know, somewhere up in here. And if you had one continuous trade, it would have stopped you out somewhere down in this 230 area. You could have made two legs out of it. The first leg was this very precipitous first pop down here, and then you had what we call a probe trade retracement right back into the mid-band here, giving you a secondary entry on the second leg here. Now you can see from earlier in the morning, prior to the market open, that we had support down here just under 15,220, and it was interesting to see that you got a double bottom here, which would have been a better out than a trailing stop to just simply take your short profits right down in there on the double bottom. You had two shots to get out of that. So this short trade could have been broken into two separate legs, leg 1 here and then the probe trade down for leg 2, or you could have had one a straightforward simple short, shorting in here on the break of the mid-band and then trailing your stop down into here.
Yeah, one thing too, Charles, by the way, you did get a quick long out of Band-Aid at 730 on YM, but the way we teach it, you would take the long, you would flip to short when it took out the bottom of Band-Aid.
Oh, you're saying a couple of bars that poked up here? Let me see if that was right at 730. Hold on a second.
While you're doing that, I just want to point out we are getting our phantom trade set up here now in the Russell first reversal bar. We get going to be a short on the phantom first reversal bar. And we're only a couple ticks away on the YM.
Yeah, what Rich is referring to here, for those of you that are sort of learning the Band-Aids here, is right up in here. So what they're referring to is quite possibly we could come up into this area here and see a rollover and potential short entry somewhere up in here.
Yeah, Russell got the reversal candle too.
So if you took the short, the second leg there, you had 55 ticks. That's about $250, $270 on the other trade here, plus your 400 on the long trade. So all in all, good morning. You're looking at somewhere in the $600-700 range just for a couple of contracts, just trading this one instrument. Here again, if you look at your NASDAQ chart NQ, it looks very similar to this. Fortunately, didn't have time to set that up here this morning, but if you pull it up, it would look very much like this, so you could have traded both. We did call out trades on both of them. And so that is the recap. Let me go ahead and take some final questions here. Let's see, Hugh asking a question. Took the short at 639, stopped out, band-aid. Stop was 2 tick, would have kept it. Yeah, well, you know, that's always the trade-off, Hugh. Hugh's question is related to the tightness of your trailing stops. And, you know, there's several different ways, depending on how tight or loose you like to keep your stops. One thing that we teach here, if you have a runner, is you see these dots, you can stay a tick behind those dots, a tick or two behind those dots. And if you have a runner, you know, generally it will come up sometimes. You have to be careful. Notice if we have a runner, normally in the room we give a couple of different numbers. We'll say, well, your tight stop would be here and your loose stop would be there. And the reason for that is that a lot of times you'll get these retracements and they'll just come within a tick or two of the trailing stop dots until they were actually broken. They were breached right here, taking the final stop out. You know, that is if you didn't get out at this double bottom down here where we, you know, clearly knew support was just below this 220 area. But, you know, that's always a trade-off. And that's if you can, you know, really if you can, these $5 instruments, if you can trade 2 contracts, that's really the way to go, because you normally get one leg on the initial pop, you know, as you did on the short and the long here. And then if you have a runner, you know, you can take that second contract. Or if you're trading multiples, take 2 off. Put 4 on, 2 off at the pop, and then 2 trail on 2 or more. That's a good way to make put some coin in your trading account early in the morning here. And that's what we try to do. We'll talk about this more tonight in the webinar. We have a webinar at 5 o'clock Pacific. Should be a good one. Everybody's going to be invited to that, and we'll cover some of these topics. We'll do a recap on some trades from this morning, and we'll look at some live markets for potential trade setups.
By the way, Charles, that short that we called in the Phantom up there at 1073.10, I'd be scalping some profit here at 1072.40 or 30. We just came down to 40.
Glad you did that, Rich. I just started to say that also because I've got a line drawn right there.
Right.
That's where you want to scalp some if you did even multiple of any kind. 2, take 1 off.
By the way, if you notice, if you've been coming into the room this week, on a free trial or a 1-week visit, we'll be in communication with you. You're going to have to keep an eye on your email there. And really what you want to do is you want to come in the span of the couple hours we have the room open, and you want to just look for 1 or 2. Find an instrument you really like to trade and stick with it. You know, I like YM, I like NASDAQ, EMD, dollar index, occasionally crude. And then put those charts on your screen, and in the beginning just do a few light sim trades until you get a feel for your instrument. And once you have that instrument, really all you're looking for in that span of a couple hours is just 1 or 2 or 3 good winners, or 3 trades, maybe 2 good winners and a slight loser. And that's all you really need to do. So I'm going to go ahead and stop the recorder. Is there any final questions? That is it.
Don't trade.